Thanks for joining us. I'm Marlon Bowling with you on a Wednesday. Remember, we have a big USDA set of crop reports coming out tomorrow. It'll be the crop production and the supply and demand report numbers. They will come out at noon Eastern time tomorrow and 11 o'clock Central time. Don't forget about that. Lots of trade kind of getting positioned ahead of those reports right now. And they're getting positioned on other things, too. Let's take a look here at what's going on in our grain trade. In the corn market this morning, we have had some weakness developing, and it is kind of expanding as we go further into the trading session. We have September corn down 5 now at 342 3/4. That would put it just one tick away from our low of the day. And let's take a look at December. That's down 5 at 355 3/4. And let's take a look at soybeans right now. On the soybean trade, we have the August contract down 13 3/4 at 842, and we have the November contract down 14.5. Now down 14 3/4 at 856 3/4. In the wheat trade, it has been lower there as well. In Chicago, we have September down 8 3/4 at 483 1/4, and Kansas City has been on the downward side. We have September down 11 at 483 3/4. Let's go to the trading floor in Chicago and find out right from the source what the traders are talking about. And on the trading floor, we have Scott Gecas standing by of Longleaf Trading. Hey, Scott, I would imagine the mood is kind of quiet on the trading floor here today with everything gyrating around in the ag commodity trade.
Yeah, everyone's pretty much, waiting for this report that's coming out tomorrow. You still have all these trade war talks. Headline risk is rampant, obviously, with everything that came out last night. One thing I want to point out is there's a lot of things in that report that the $200 billion going into it doesn't mean anything. One of the tariffs is going to be on cassette tapes in cars. No one has cassette tapes in cars anymore. So the other one was, LNG, liquid natural gas. Those things, they're not a factor. They shouldn't even be in there, but they are. But my point is, with the headline risk, it makes people panic. The public reacts right off the headlines. That's why you see, as soon as that headline came out, you've seen all the markets just across the world, completely collapse a little bit. They're starting to firm up a little bit here right now. But either way, there's still a lot of tension, a lot of risk on. Volatility levels are higher to the put side. It's just people protecting what they already have.
Scott, one thing I was reading this morning was the fact that when it comes to actual product tariffs, the actual physical products, China is running out of things that they could retaliate against just because there is so much more on one side of the ledger than on the other side. They may have to focus more on services or something like that. Are the traders talking about that as well here on the trading floor?
Yeah, China's definitely running out of, options to retaliate with, but they still have a lot of other, measures to retaliate. If they stop buying U.S. bonds, that could be a negative impact on the whole U.S. economy or world economy. Global recession has always been thrown around lately for the last few weeks. So whether or not that is actually going to happen, we're actually going to wait and see how that's really going to play out.
Is there a lot of pent-up energy if there would be an announcement where all of a sudden, everything's good, we got it figured out? What would happen in the market?
I think everything would just shoot straight up. I think that's a pipe dream right now. I don't think, with all the global tensions going back and forth between, Russia and Germany, between U.S. and China, all the NAFTA thing, for a global to come together and have one focus, I think that's asking a lot.
Okay, a look at Minneapolis wheat and the cotton market, and then we'll take a quick little break. On the Minneapolis wheat, we're down 8 on September. We're trading at 529.5, and on the cotton trade, we have the December new crop contract currently down 110 points at 85.28 cents per pound. We'll come back and talk more with Scott Gecas about our livestock trade right after these messages. We're back, and we are talking with Scott Gecas. He is with Longleaf Trading in Chicago, and we were talking about our grain market activity a short time ago, some of the outside markets as well. With everything else going on, the grain markets are on the downhill side today. Also overnight, I saw where the Dow Jones Industrial Average opened up roughly about 130 points weaker this morning or so, at least in the early going. The dollar value was fairly flat. We can maybe pull that up and take a look at the dollar index index right now. Currently, September futures, they've been on both sides of unchanged. Right now, they're just 40 points higher at 93.940. The deferred contracts basically about steady. Crude oil trade today, a lot of folks wondering what's going on with the energy markets. Well, the August crude oil is now down $1.16. This is West Texas crude we're talking about, and it is priced at $72.95 per barrel, and that is off of its earlier high of the day by about $1.75 or so. Let's take a look also at what's going on now in our livestock trade. Let's go to the live cattle board. Lots of losses in the livestock complex today. We have the August live cattle currently down $1.97. We're at 103.48. It has bounced a little bit off of its earlier lows by a little over half a dollar now. October down 184. Last trade 105.98. Now, if we look at the feeder cattle trade, we have at times been over $3 weaker, and we still are in a couple of months. August down $2.90 at 148.95, and September down $3.23. Last trade 148.82 per hundredweight, and that is well over $3 off our earlier high of the day. So let's stop on the cattle side here. Scott, your thoughts on the way the market is acting here today?
Yeah, with the cattle, just the protein sector, just in general, it's a perfect storm. You're running into oversupply, you're running into bearish weather, all the trade war talks on top of that. It's definitely, risk is definitely to the downside. You can see the call put skew definitely going to the put side. The cattle trade, hot, humid weather, pushing prices a little bit lower. Strong cash is supporting price. That's the only positive thing. 102 in the cattle market is going to be a key support level.
Okay, on the lean hog trade, we closed limit down yesterday in the August contract. That means we're in expanded limit mode today on the lean hog futures. Let's go ahead and take a look. The August now is absolutely unchanged. We have been on both sides of unchanged today. It's now at 69.78, right where we finished up yesterday. October down 7 cents at 53.70. So things got really quiet in the hog complex today, while the cattle have been really sliding to the downhill side here. The lean hog trade, though, I guess the question is, where is support?
Yeah, everybody on the floor is talking about the differential between the spreads. July to D's is trading almost at a 10 to 15 point difference. The market is trading at about 12.15 discount to cash. The 5-year average on that is about 4.50, so that's significant. So what we're hearing on the floor is it's a short squeeze going into the expiration of July. So we're going to see how that July contract is going to play out in the next few days here.
Okay, well, Scott, good to visit with you, sir. Appreciate all the help today as we analyze these big moves in the markets here. Scott Gecas happens to be with Longleaf Trading, and he is based there in Chicago. So, Janet, there is so much going on here in the markets that hinges on tomorrow. For one thing, with all the outside market factors going on today with China news, but tomorrow we have crop production numbers, supply and demand numbers. They'll be coming out a little over an hour from right now, tomorrow, and we'll have all the details. How much will that impact the trade?
And just to add to that, of course, we had a story earlier this morning that they're going to change it where the reporters don't have access early.
Very true, yeah.
So that's going to delay the information.
That will start August 1st, and that'll take some getting used to, because the news won't come out quite as fast.
Right. Thank you very much, Marlon.